is Apple time. All right. Earnings Tuesday, January 29th, I believe, for Apple. We're going to do the lines in the sand on the monthly candle chart. See where I'd like to see the monthly close. Am I still in the downtrend, guys? I'm constantly reevaluating. So the price action moves so fast, so many charts to check out. Checking the index, Intel, a whole bunch of movers. But when you get a chart, don't assume whatever you had analysis is still valid. It doesn't take many candles. You see these moves, look at that, crazy moves. Month down 18%, lots of damage, 11%. So it takes 5 minutes. Check it out. Define is my monthly define support. Sell and tack is a breakdown pattern. Sell and tack. What's my weight of evidence? Is my 12-month moving average going down? Is the price action below? Why is the price not going down anymore? Am I defining some new support on the monthly? And it looks pretty much like this, guys. Even here, maybe a bigger pattern. Maybe here. It could bounce off here. Not all the way up here. So let's check it out right here. The faster it goes up, the less on the way down. It's hard to see where it could stop. That's why it goes up fast. It usually comes down in a V shape. You want some monthly defined support helping you see where a bigger pattern is. But right now, that's how I see the buyers coming in here. No, you're not closing below 154. Gap down, start open at 154. Try to go, went down. Price action, no, 154. So we're gonna zoom in on the weekly. Higher trend. 12-month average going downwards. You're below it. Huge red candles, damage. It's not something you want to see in an uptrend. It's actually signs of a downtrend damage. You're not going back up to 230 anytime soon. This is damage that you're going to have to work your way through. The price action has to go back closer to 12-month average. All these buyers, you're going to want to sell to break even. You're going to hit this monthly defined support turn resistance, and then you're going to hit this monthly defined support turn resistance. You're going to hit the 12-month moving average. Yeah, a lot of steps, and then you have to go up back above, start re-inclining that 12-month moving average, and then you have to ultimately take out that 229 high monthly defined break line, and then you resume. Well, that's when I would resume that uptrend and say, okay, I'm out of the woods, and then we could go for another legs up. If the price action is above the 12-month moving average and you haven't overcome those highs yet, if enough time has passed, if you go on the weekly and there's no overhead, each line defined resistance, you have volume on a horizontal breakout line above 30-week average, then you could probably play it on the way up and then expect a pullback on that monthly defined resistance. But until then, this is the inverse happening. We're actually going downwards, and that's the higher trend. Okay, let's zoom in. Stan Weinstein style. Whoop. I went fast through below the Ichimoku cloud right here. Huge red candle underperforming the SPX. Tiny arrow. Still underperforming the SPX. SPX is pulling harder back. Apple is not. What's happening with Apple? It's sideways moving. Decreasing volume on the pullback right here. You have those red candles, red volume candles here. Here, they're everywhere on those huge down weeks. Huge red volume, more red volume. So right now you're hitting that, we hit that monthly defined support. The price action on the weekly, just etching above it. 30-week average, we're kind of far away from it. Let's check it out. Distance away from the 30-week moving average. Yeah, so ideally, that's probably why it's sideways moving now, or it's going to help you. You're going to let the 30-week average close in. Let that catch up, and then get a good risk-reward entry here. I don't know. It depends also if it hits this monthly defined support. It could decide just to go down here, maybe pierce through, and then continue that pattern, then go down to lower levels, guys. Let's get some more clues. Right now we're kind of in a consolidation pattern, no man's land. Let's see if we've built up any energy, any divergence with indicators. All right. Still oversold. Let me get trend line. Lower highs on the fast stock, lower highs still in progress on the price action. Is there any bullish divergence? Lower lows, lower lows. Guys, nothing yet here. So right now this is just a little sideways move below that Ichimoku cloud defined support, below that monthly defined break line here, and right above that next breakout line here. Sideways move in between those two levels. Can we get details on the weekly? Let's go on the weekly, see if there's any divergence building up. Ooh, on the weekly, this has really inflated. Build-ups in the weekly and the daily of divergence, either bullish or bearish. It's fast consumed, not as precise as what you'd get on the weekly. The weekly would give you a more sustained move. A lot of this noise is removed on the weekly. And on the monthly, I'll show you the monthly. Where's it? Fast stock monthly. You don't really use divergence on the monthly. It's too slow. It condenses too much information. But what it gives you is, when you see these type of patterns, you don't expect it to go down. It needs to reset. This is normal behavior. This is when you want to see an uptrend. See, every time it goes an uptrend, it's overbought. It stays there. And when it actually goes down, it's going to go down for the count for a while. And then you're in oversold territory and you stay there. You could stay there for a little while. And right now, we're still in oversold. So we could be building right now these moves. See where it went down? So the long term on the monthly, the fast stock, it's not for divergence. It's for the trend, the healthiness, and the healthiness of the trend you're in. And this is normal. This is behavior you want to see overbought on the monthly in an uptrend, and you want to see it oversold on the monthly, on the fast stock on the monthly chart. Okay, let's go back to the fast stock on the daily. Let's get in the details. Fast stock starting to, on the daily, giving some signs of overbought right there, creating some divergence on these highs, lower highs, price action, higher highs on the stock. It's even, if you go a little further, get some more spring action there, bigger fuel tank of energy that could go in the opposite direction. Stretching it out, we're right here, same thing. Lower highs, higher highs on the stock. So this is on the daily. If you combine that with approaching 50, wait, these lines, Pat, they're in the way. Move that. Combining that, we're closing in on the 50 MA. That Ichimoku cloud defined resistance on the way down. Huge red candles on those down days. Contracting volume on that ride up. This could be a turning point right here, and hitting that monthly defined support and resistance. So the more you zoom in, the daily, you could get signals, but they'll be shorter term signals. They'll be less precise, and they'll get overcome if they run into weekly or monthly defined signals. That's why you always leave when you have your monthly defined trend lines, leave them on. And when you zoom in on the daily, you could start expecting, okay, monthly defined support, turn resistance, that's going to hurt me. My daily is going to, it could bounce through temporarily. By the end of the month, it's going to go back down, just like here, hitting that monthly defined support. Went back down, but after that, price action sucked it back up. But this could start getting to a good risk reward entry. This price action could actually maybe go up a little bit and then follow through below that 50-week moving average, consuming the stocks, build up energy, and maybe have a fast leg down. So that's how I see Apple, guys. You really have to drill in. And I was checking the Nasdaq, guys, the percentage of stocks above moving average. And since Apple is in the Nasdaq, it's one of those stocks. I just want to check the health of the overall Nasdaq, the index that it's in. And I've posted a few charts on StockTwits and Twitter. And what I've noticed here with the Nasdaq on the daily, divergence, lower highs on the price, higher highs compared to the 50-day. These are the quantity of stocks percentage above the 50-day moving average. And now, right now, the Nasdaq has 73% above the 50. If they're above the 50-day moving average, the last time we had that was a while back. And here on the month, compared to the 200-day, there's no divergence. But this number keeps reinflating, guys, and this is more energy building up. Remember when it was down here and people say, I'm going to short this to the end of the world? Well, this does, you need that to reset, let the price action reinflate. And when you're in a downtrend, it reinflates the price, but it doesn't reinflate all the way high. So you get higher, less high. Every time you take a step down, that is a downtrend. These indicators, they reinflate higher than the price action, creating bearish divergence, giving you the fuel to go down. And after that, when we're going to start hitting a low, it's going to reinflate. And then after that, when you get some more divergence with the price action, goes higher here. And then after that, gives energy to go down. For the 50-day moving average, that's great. For the 200, if we start seeing divergence with the 200, there's a good chance, if a lot of the stocks are above their 50-day, their 200-day moving average, that the price action is so high that you're out of a stage 4. You're starting to get into your stage 3 territory. So you want slight divergence right here on the 200-day moving average. Right now, we don't have any. So it's just business as you go. That indicator is not showing you that you have a gas tank for the 200-day moving average indicator. But if this goes down, we could be hitting that trend line, and the quantity of stocks above the 200-day moving average could start going down once again. So that's the fuel building up to go down. And since we're not doing higher highs on the price action, we're still in a downtrend. We're still below the 12-month moving average, still below the 30-week moving average, but we are above the 50-day moving average. So that's the fastest moving average I'm looking at. You could have some noise above it, and we're starting to hit some Ichimoku cloud defined support. We're still below the 200-day moving average. So noise above. Was that the last gasp of air in that downtrend for the Nasdaq before the next leg down? We're going to have to keep an eye on that, guys. So Apple, a big part of the NDX, Nasdaq, they go pretty much hand in hand. We've identified, let's just pop up the chart one last time. We've identified that we're still in a downtrend for Apple, far away from the 30-week average. Sideways move right now in between these two levels. So let's see if we get a monthly close below 154. That would be a good sign of a resuming of that continuation of that stage 4. but we could also have a pull back up, maybe hit that 164 and then go down. All right, those are the levels. Let's see if Apple goes down further. Thanks for watching, guys. I appreciate it. Thank you.